what's happening. So I'm trying to use my mic for the session today. So I'm just testing it out. Um, I think this is better. Okay, guys. Good morning, good morning, good morning, good morning. I hope we're all doing fine and we all woke up healthy as always. And thank you as always for joining in on another stream session with me, and I hope last week was good. I believe last week was good. It was good for me, except if you guys have had anything otherwise except that. But last week was good for me, and this week is a bit more macro inclined because we have NFP and we also have a Pearl speech this week. So let's quickly look at that for those of us that are not very much active on looking at fundamentals. Okay. So let me just quickly share my screen with us. Okay. Okay, so let's quickly take a look at Forex Factory, okay, and most importantly FX Street. So let's was on the calendar. Okay, so usually I would filter and just leave it as the medium and high impact. Why I leave the medium impact is because some news channels usually don't classify these things as new or as high impact, but they are high impact. Hi, good morning, Daniel. Good morning, Afeso. I see you guys. Okay, so let me just make a snap quickly. Morning, guys. So I'm active on YouTube. I am streaming live on YouTube right now. We're talking fundamentals and how to apply smart money confluences. So tune in. Let me just make a snap. Okay. Morning, guys. So I'm active on YouTube. I am streaming live on YouTube right now. We're talking fundamentals and how to apply smart money confluences. So tune in. Let me just make a snap. Okay. Morning, guys. So okay, so yeah, so today's Tuesday. We have job openings today on Tuesday. This usually would kind of tell us, how many job openings are, available and how many are taking, but usually it doesn't signal so much because you can have 7 million job openings and still have lesser people getting employed. Okay, so that's also a possibility. There's also a possibility to that as well. Then on Wednesday, which is tomorrow, is where the main cocoa is happening, and this week is going to be wild because we have FOMC, we have interest rate decision tomorrow, and then we have NFP on Friday. So let me paint the scenario for you guys and what is most likely going to look like. Now, if we get an interest rate cut before NFP, is usually going to be chaotic because usually FOMC is supposed to be anchored by a totality of every other report before this thing. But now FOMC is coming at the end of the month, and NFP is happening at the start of the month. You get, so that's like the major difference between the two of them. Now we know that Trump has been clamoring for what do you call it? Trump has been clamoring for interest rate cut, interest rate cut, interest rate cut. He even specifically hinted in his interview on Sunday morning, stating that he had a long discussion with Powell, and Powell did in fact state that he would be lowering interest rates. Now we know Trump as someone that speaks when he wants to speak. You know, he's not very much filtered, and his speeches so far so good this year has proven to us that he can manipulate the market with just, you know, anything he says, and he tend to be very much interested in doing things like that. So you always have to be careful. Now, do I think Powell might lower interest rates? Even if he would lower interest rates, people are going to react very aggressively to it, and he probably won't lower interest rates so much. The best Powell is going to start with is a 2.5 base point if he's going to lower interest rate. He won't go higher than that. A 0.5 base point is going to be ridiculous for a first move to lower interest rate after a very long time. It would scare investors. Morning truth. It would scare investors, you know, so it's not something he would likely do. And aside that, we also see there's also going to be a press conference. Okay, there's going to be a press conference talking about the crypto adoption of stable coins into the economy and how financial institutions are going to key in on it. So if we see a positive review from financial institutions accepting to actually key into stable coins, that also is going to move the market. It's going to move the market like very well. Oh, okay. Yeah, Z boy, your name is Strutball. Yeah, I see you now. Yeah, so that's like another major thing to also pay attention to when it comes to tomorrow and what's going to happen in the market. And on Thursday, we see the Bank of Japan policy rate. So they also have their own interest rate. They also have their own interest rate on Thursday. Now, why Thursday is important for me is, if you guys remember, I have been on a GJ trade, a GBP JPY trade, since last week or the week before even. And so let's quickly. So let me pause this and let's look at my GBP JPY trade. Okay, so I called GBP JPY for us, and we've been on GBP JPY from somewhere here, I think. Yeah, I think from this point we had entries at this point, and then we had entries at this point, and then we took some other entries that got stopped out. So market has been ranging in this box here. So if we see what do we call it? If we see the Bank of Japan for any reason either lower their interest rates, okay, then we would see a possible spike in the movement of the market. We'll get a possible spike in the movement of the markets there to actually break out of that zone, okay, for the JPY. So we have their monetary policy statement, we have their outlook report, and remember, we've got into the half of the year. So everybody is going to be talking about the first half of the year and how the half of the year went, and if there are possible improvements that they would want to be taken. So now we'll start to see. That's why the policy statement is also as important as the policy report or the interest rate. And why that is so is because the interest rate can be low nonetheless, but then the policy statement could still be signaling, hawkish situations. Just necessarily because it's the interest rate is low doesn't necessarily mean that they would just see automatically a decline, or it means it will be dovish. Okay, so we need to also pay attention to that, and that's why I always say that they leave these hints in very subtle, coded languages, and it will take you to actually get to a point of understanding, to actually see these things for what they are exactly. Then on Friday we have the non-farm payroll, which is also very important, which is the NFP, the most awaited news at the first week of every month. It's the non-farm payroll. We see expectations on the non-farm payroll at 108k, which is signaling lesser jobs than the previous month. That was than the previous month of June. In the month of June, we saw 147,000 jobs being added into the U.S. labor force, but in July, there are things signaling that okay, we most likely would see a reduction in that number. So we're seeing 108k, and as always, we know that a greater number is good for currency, a lesser number is bad for currency. So especially when it is lesser than previous and lesser than expected, it's completely bad. If it's greater than previous and greater than expected, it's extremely good. But I always say these things to you guys that are my people and my followers, and I always say that you want to pay attention to not just the strength of the currency but the strength of the economy. So we're not just going to jump into trading NFP on Friday. We first need to understand what FOMC statement was all about. You get? So the statement can help us understand if or not the currency would remain strong at all or would remain very weak at all, because at the end of the day, the economy of a country is what dictates the currency state. The only time where a currency might start to gain strength above the economy, which is a bad condition, is when there's a high inflationary situation in the country, meaning that the central bank at that point in time is most likely going to tend to pour in a whole is going to keep hiking interest rate and putting the whole attention on the currency in order to what? In order to bring in investors' money into the economy to hold their debt and those kind of things. So aside that, you want to pay attention to the economy first before the currency. Pay attention to the currency is good as well,